Hey, welcome to the podcast, everybody. Thank you for joining me. Today's Monday, February 24th. I want to give you a quick update on the stock market. The S&P finished up about 12 points. The Dow Jones about 104. Both of those were about half of what they had made earlier in the day. If you take a look at the intraday chart, you can see exactly what I'm talking about. Stock market was really strong on really no reason. It got stronger and stronger throughout the day, and then around lunchtime, that was it. Straight down and finished with decent gains on the day, about 0.6 to 0.7% on all the major indices, but it was that intraday reversal that's catching everybody's attention. And now, obviously, the question is are we at this double top? And when I say a double top, for those that are new to the podcast, which we have a lot of you, double top, actually a triple top, would be these points right here. So we draw a line across and say, is the market having trouble breaking above basically 1850 on the Standard & Poor's 500. Here's what I think happened today, and we'll answer that question in just a minute. Is it a double or a triple top? I think what happened today is that we've obviously had this big V, right? This was a correction, we called it, and it turned out to be that. The market snapped back. I think what happened was everybody's assuming that we get to this level here and we're going to roll back over and head down. So when we broke above it this morning, and I'll change it again back to the 5-minute picture so you can see the black line will remain at the old high. Right when we broke above the old highs, the stock market went up even higher. And the reason it did was because there are a lot of computer systems set up around the world, algorithms set up, that are looking for a pause here and it rolling over. And so they have it set that if it breaks above the old highs, buy. And that's exactly what happened. So you have this kind of what could be a blow-off top where everybody jumps in because they say, hey, if it reaches this level and goes up higher, we want to be a part of that. So it jumps up even higher. The question we have to answer is this a fake-out breakout? And that is a term, I think I may have coined it. I'm not sure. I haven't heard it anywhere else. But where essentially you get this technical pattern where it breaks out, right? And it looks like it's going to keep going. And usually when you get a breakout above an old high, it keeps going. But sometimes what happens is it breaks out above there and it fakes you out to where you want to buy, thinking the coast is clear, only to get a reversal back down into the old levels again. And it certainly looked like that today. Now, again, these pictures can show you quite a bit of different things, and you can analyze them several different ways. Certainly, we're at a period that the market should roll over a little bit, and the reason why is we've gone straight up since these levels. So it should take a pause and pull back. I don't think there's any reason why we shouldn't expect it to pull back somewhere in this area here. I think that's perfectly logical. There's no reason why it wouldn't pull back there. It wasn't a bad day overall, but what we're noticing in the last 4 or 5 days here, and we've seen this, is that we're starting to see some less participation in the markets overall. And it's happening in technology. It's happening in small caps. You're getting not as much broad participation. So what that shows you is when you have a rally that has that characteristic, it's as if some of the runners are starting to walk. Everybody's starting to pause a little bit. People are getting tired. And that usually suggests that you would have some type of pause. But having said that, a pause is very different than the top. Do I think that this is going to be mark the top? There was people here that thought that was the top. Here they were feeling justified, and then we broke up to new highs today. I don't think this is the top. I do think ultimately we do go higher, but I think we could back and fill a little bit and go a little bit lower first. So again, if you're wanting to buy, keep a balanced approach here. I think you will have a chance to buy some things a little lower. Again, it was a good day overall, and if you own stocks, you're happy about that. But we are seeing some little bit of less enthusiasm for stocks than we did earlier. The other thing that I think is interesting is if you watch interest rates, they're starting to move up again. So interest rates moving up, you still have some of the inflationary type items like gold continue to move up. Do you still own gold? We talked about the fact that gold could pause and head back down, and this would be an easier buy point. It has not done that. And I'm happy because I own a little bit of gold, but I'm unhappy because I'd like to buy a little bit more down at this level. And we haven't had that. So gold continues to move almost straight up now, and it's becoming a very interesting trade because now it's obviously there's chasing going on. So gold is moving up, interest rates are moving up, and yet stocks have continued to move up. So you got this something has to give routine, but overall it wasn't a bad day if you own stocks. You just have to realize that we are seeing some deterioration in the short term underneath the surface. And again, a pullback I think would be healthy. I think what we really need is, one concern to me is that I think the bigger risk is that we have a blow-off top. And what a blow-off top is essentially when you get this move where it goes straight up. And if we get that, and let me zoom out a little bit, if we get that move higher and it just blasts off, everybody that's on the sidelines will rush in to buy stocks. And when you get the blow-off top that moves straight up, you tend to get the more violent move back down. That's the problem with a blow-off top. It's great if you own stocks, but you have to get out at the right time. What we'd rather see is some what they call consolidation, where the market kind of moves sideways for a while. The fundamentals improve, don't deteriorate, right? We get the Fed continuing to get out of the way. The economy stabilizes. Let's say that some of it was the weather, and we get the economy getting back to more normal growth. If that happens, and commodities don't go out of control here and really squeeze the consumer, if all those things happen and the earnings continue to go up and yet the market moves sideways, then you've got a stock market that should be bought. But right now it is tough because it's getting stretched on the fundamental side, but on the technical side we still see higher prices because everybody's wanting to own stocks. But I would isolate this again in time frames in the very, very short run. Be a little patient here because this is the type of action that generally will show you that you had a pause and we could see some pullback and you may get a chance to buy stocks a little bit lower. Now when I say that, keep in mind this is a big ship to turn. So if you're thinking that the market goes straight down here, again, look what's behind here. This is a lot of momentum behind it. So it would not surprise me, even though it should pause here, it would not surprise me for it to keep going simply because that's what it's done in the past. And we do have underlying strength and people that want to own more stocks. But be cautious because underneath the surface we're getting a little bit of deterioration. Nothing major. It's not causing me to make major shifts in my portfolios, but I do have a small short position on the Russell 2000. And that's something that I could get stopped out on, but it's something that I'm balancing that with some other stocks. We own a social networking stock that's doing very well and kind of offsetting that. But if we get the pullback, then we can use those proceeds to obviously buy something else. And those are more an aggressive strategy, more for short-term trading. Big picture, I would not be changing a lot of my allocation at this point. You need to see more evidence of deterioration before I was to do that. I wanted to remind you that we have a weekly radio show. It comes out on Saturdays, and so you can always stream it, but we always do put it on the blog as well. It's called the Eggers Report, so make sure you check that out. It's on karleggers.com, and we're going to be revamping our website very soon. It's going to be much more robust, a lot more information, so look forward to that in the coming days and weeks. And don't forget, on the screen here is all the ways you can connect to us. Thanks for joining me. Appreciate it. Have a good evening, everybody.